Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up
Yeah. Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this sad like she fine as I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-Wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, open up some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up watching them man, big profits. While I'm still in my sand, making profits. They used to watch me move them packs and die. Now I watch moves in the NASDAQ. Profit. Used to run from the ATF and them cops. Now I run down ETFs, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them man, make profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them man, make profits. While I'm still in my sand, making profits. They used to watch me move them packs and die. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETFs. Hey, my family. Hey, go, what we doing, my man? Make profits. Hey, Shug, Mike, what we doing? Make profits. Yo, Wolf, Professor, what we doing? Make profits. That TTG money gang, making profits. We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and the head trader at True Trading Group. I'm happy to have you guys all here with me as we have Alphabet and Tesla earnings. We also got IBM. We got ServiceNow. We've got a lot to talk about. Alphabet earnings are already out, and I've got some bad news, and then I've got some good news. And we're going to talk about what all of this means for the markets tomorrow. New all-time highs in the market again today, fueled by trade deals with Japan and some progress made with the European Union. But now I think that the conversation begins to shift now over to earnings. Short squeezes continue. Okay, short squeezes are continuing to move higher. These highly shorted names like a QBTS, an NVTS, a Webull, a 1-800-Flowers, the D-nuts of the world. Okay, the short squeezes are still pushing. I've also got one stock in particular on watch for a short squeeze that I'll share with you. But first, let's go over and talk about some of these earnings. Before I get started, guys, I just want to make sure everybody here understands. If you guys are new to the community or you're new to the YouTube channel, you guys understand True Trading Group, we exist to help you learn faster, trade smarter, and profit sooner. It's exactly what we're going to be doing here on this live stream. And we are proud to be powered by the NASDAQ, Benzinga, OpenAI, TradingView, DataBento, and Unusual Whales. Okay, those are all of our partners in helping make the TTG platform what it is today, providing all the tools, the resources, the AI trading co-pilot and analysis, an award-winning AI platform. Our AI, TTG's AI, Mari, received the Benzinga FinTech Chairman's Award in 2024 for best AI analysis tool. And we are coming for that prize again here this year. Our members have access to all of this technology, all these tools and resources, and that is helping them to make money. And at the end of the day, that is exactly why we are all here. That's why you're on this YouTube channel. That's why you're hanging out here to check out earnings. Speaking of which, let's go ahead. Let's talk about everything that we have here with earnings. Before I do, why should you listen to anything that I discuss on this channel? I'm glad you asked. I'm not just a guy in a Yankee hat on a YouTube channel. I began my trading career working at T3 Alpha Fund in New York City, my first job out of college. While there, they had me go through a training program before they let me touch $1 of the fund's money. I was trained by professionals on Wall Street. I didn't have to, sit in Discord rooms or watch YouTube videos. I was very fortunate that I got my start working professionally and was trained by professionals at a fund in New York City. Then 2008 happened. That was the Great Recession, the big stock market crash. It's also the same year that I received one of the firm's Trader of the Year awards. All right, now you fast forward, I'm the co-founder and head trader of True Trading Group, along with my team of 8 other professional full-time trading mods and an over 30-person staff. We've helped thousands of members from all over the world to reach their goals. We have members in 115 different countries, truly a global community, over 10,000 members strong, something for everybody. We day trade, we swing trade, we covered long-term investing, we trade stocks, options, futures, crypto. We do it all. There's something for everybody, all right? So if you're new, subscribe to the channel, smash that like button, show some love, turn on your notifications, all right? And let's dive in. Let's talk about earnings. So like I said to you before, we got some good news. I got some bad news. The bad news first, Alphabet has drastically increased their CapEx spend for this year. I'll give you the good news. Alphabet has drastically increased their CapEx spend for this year. So it's good news and it's bad news. It's the reason why it's bad news is because usually in an environment like we find ourselves in, investors don't necessarily want to see a company dramatically increasing the amount of money that they are investing into, longer dated projects like the best example I can give you is when Meta was crashing a couple of years ago because they were investing so much money into the metaverse. And that's not something that's going to pay off in profits and revenue for quite some time. So Alphabet is a top and bottom line beat on their earnings. It is a great earnings report. Okay. They beat on revenue, $96.4 billion in revenue. Analysts were expecting just under 94 billion. So about $2.5 billion more on the revenue side. And earnings per share is also a solid beat. $2.31 on the earnings per share. That's against analyst expectations of $2.16. But they are increasing their CapEx spend to $85 billion. That is up from around $75 billion. Okay. And that had initially, you saw Alphabet move to the upside and pop on the back of the earnings beat. And then it dropped most likely on that CapEx. Increase and investment there. Now, why is that also potentially a piece of good news? It's a piece of good news because that means they're still heavily investing in AI. They are not slowing down their investment in AI. And how do you know that is the case? All you need to do now is you take a look at some of your other AI infrastructure and AI hardware related names for signs of that. Look at what NVIDIA did on the back of that CapEx announcement from Alphabet. Look at what Broadcom did on the back of that CapEx announcement from Alphabet. Because if Alphabet is telling you, Alphabet is one of the big AI hyperscalers. It's Alphabet, it's Meta, it's Microsoft, right? These are your big AI hyperscalers. And when you're looking at, a company like Alphabet with that size of a company, that much of an investment, to take that investment from 75 billion up to 85 billion, it shows you how aggressive the appetite is from all these companies to continue to invest and build out AI technology, whether it be, the hardware, the software. You're seeing it. And that's why you're getting some of these companies like Broadcom, like NVIDIA, like some of these semiconductor names. That's why they're moving higher on the back of that announcement from Alphabet, because it shows you that the investment into AI is not slowing down. Alphabet is showing you we are actually accelerating it. And that bodes well for earnings for these companies like a Broadcom, like an NVIDIA, like an AMD, et cetera, and all of those stocks moving to the upside. Look at AMD moving to the upside, NVIDIA moving to the upside, Broadcom, okay, moving to the upside. And that is the reason why. That's why I'm saying, it's good news, it's bad news with them increasing their CapEx. Initially, Alphabet investors may not like it, but the rest of the market loves that idea of you having NVIDIA, Broadcom. Just means better, stronger earnings for the AI-related names and the semiconductors, and that's a huge part of the tech industry, of the tech sector, and that's a huge part, obviously, of the weighting in the S&P 500 and the NASDAQ to continue this market rally that we've seen. So that's why that's the good and the bad there with regards to Alphabet's earnings. It's actually Alphabet's earnings are not as good for Alphabet. Not that their earnings are bad. Their earnings were fantastic. It's top and bottom line beat. With that big CapEx increase, investors might not like that all that much, but investors of the Broadcoms, the NVIDIAs, the semiconductors, those investors love that, right? Absolutely love that. Wow, way to go, Sam. Sam goes, I acquired over $5,000 in stocks from profits in the last month using Mari and the suggestions from the trade deals being done. I sent Mike the proof today. TTG works. There's a comment from Sam C. I love to see that. My boy Fade Doctor already paid off. Okay, my boy Fade Doctor already paid off his AI Pro subscription. His AI Pro membership with True Trading Group. So we do have different tier levels of the AI on True Trading Group. There's the AI Pro, which is our highest, most capable, incredible model that has all the sequential thinking and has deep research, and it has the reasoning and the enhanced everything. It's the top of the line AI product that we have, and that is available on the market today. That's our AI Pro. Then you have AI Plus, which is still fantastic, but it's just not quite pro. And then you have AI Core. Okay. So that is what we're seeing there. And obviously that's really nice to see that, Fade Doctor's already made back the investment, or made back the, investment. Yeah. It is an investment when you guys are becoming, getting access to some of these tools and resources. Again, there's a reason why we work so closely with OpenAI. There's a reason why we have a partnership with the NASDAQ and Benzinga and Unusual Whales. There's a reason why we received the Benzinga FinTech Award for Best AI Analysis Tool. It's because what we have here and the platform that we have, the tools and resources available to our members, it works, guys. It just works. All right, let's keep going. We have a lot more earnings that are out. Okay, we have a lot more earnings that are out. We've got Tesla. Oops, did I just X out of? I just X out of my feed. Give me 1 second. Sorry about that. All right, here we go. So Tesla is a miss, top and bottom line miss. 40 cents a share versus 42 cents. Sales come in at 22.5 billion. Analysts were expecting 22.8 billion. And Tesla says it is difficult to measure the impacts of shifting global trade and fiscal policies on the automotive and energy supply chains, our cost structure, and demand for durable goods and related services. Tesla says we continue to expand our vehicle offering, including first builds of a more affordable model in June, with volume production planned for the second half of 2025. Gross margins on Tesla actually much better than what was expected. 16.5% was what was expected. Earning margins coming in at 17.2%. So that's pretty. That is nice. I mean, that's a surprise. I don't think many people really expected to see. I don't think many people expected to see a margin beat on Tesla. But looks like Tesla is not really a big mover here after hours. This is one of the more muted reactions to an earnings report that I've seen from Tesla in quite a while. This is one of those situations where, the sellers of premium with the iron condors and butterflies are going to be able to, really pocket this one, because whether you're in calls or puts, you're most likely going to be losing money tomorrow if nothing changes at that 5:30 conference call. Usually Tesla has their conference call after 5. And unless Elon says something crazy that moves the stock one way or the other, the stock really hasn't moved. So that IV crush on your options will hit tomorrow morning. But Tesla has been known to make large moves during the conference call, depending on what Elon Musk says. So nothing's out of the realm of possibility during the Tesla conference call. Okay. All right, so that's Tesla. And once I'm done going through the earnings, guys, we'll talk about some levels. We'll talk about some trade ideas. Let's see what else we have cooking. We have ServiceNow. Okay, ServiceNow, another one of our software names that we like here in True Trading Group. It's a long-term portfolio add. It was a beautiful support level. You see the line drawn out on my screen. Previous all-time high back in 2021. You broke above it in 23, and then it was support. Okay, during the tariff sell-off, overshot it, reclaimed it. I'm sorry, I was pointing to the wrong area on the chart. So here is, you guys can see we were able to hold support there in 24. And then here is the tariff drop in April. It held support there again. We actually added to the position there in the 700s. And now the stock trading up here over 1,000 as they got their earnings that just came through. So let me go through here, guys, and pull up the numbers here for you with regards to ServiceNow, as this is one that is in the long-term portfolio for us. It is a top and bottom line beat. $4.09 earnings per share. Analysts only expecting $3.57. Sales come in at $3.215 billion. Expectations were only $3.12 billion. ServiceNow extends end-to-end AI agent orchestration with agentic workforce management to accelerate their AI impact. They plan to partner with CapZone to build a national network of next-generation digital solutions for mission-critical manufacturing facilities. Big resistance level here at 1050. We'll see if the stock is able to get above that. That's your previous large gap down from January. If this stock can get above 1050, then you're looking at a gap fill all the way back to 1150. But for now, still well underneath that resistance. We'll see if you're able to break through that maybe during a conference call, but that is your line in the sand. 1050 resistance there for ServiceNow. Then we have IBM, okay? Then we have IBM. Let's go through these numbers, okay? IBM is also a top bottom line beat, $2.80 versus $2.64 earnings per share. Sales come in just shy of $17 billion. Analysts expecting $16.57 billion. Let me see. Well, Bank of America just announced a $40 billion share buyback program. So that's nice for Bank of America. Wells Fargo, JP Morgan, all back, new all-time highs. Goldman Sachs are still back. Those are the banks that I own are JP Morgan, Wells Fargo, Goldman Sachs. And those are doing very, very well. But that is a little piece of news that just came out there. That's also breaking news that we got there on Bank of America, even though they don't have earnings, but that is news coming there from Bank of America. But okay, yeah, so IBM, guys, a little bit of a pullback here, back down into a support level of its own. You know, we would like to see the stock kind of stabilize here in the 260s, because if you take a look at my daily chart, you'll see all this resistance that we had back here in January, February, March. All right, you kind of topped it out again to give you a little bit of resistance. Then you broke through it. Now you're dropping back into it. I actually think this might be a decent level of support for IBM. Okay, I think that might be a decent level of support. All right, so let's see if that level can hold there for IBM. All right, let's see if we can hold that on IBM. All right. Then we've got Chipotle taking a hit. Stock is down big, man. Stock's down 9%. Stock is really getting hit hard. They missed on sales, and their EPS is in line. 33 cents a share, and sales come in at a miss. 3.06 versus 3.11 billion. And that's got Chipotle headed to the downside. Now, I hope that's because more and more people are going to Cava. Cava is a name I've got in the long-term portfolio. You know, it's not quite yet a fully national brand, so some of you may not have had a chance to go to a Cava, but Cava is essentially Chipotle just with Mediterranean food instead of Mexican food. It's tzatziki, hummus, lamb, chicken, you know, instead of, you know, tacos and burritos and everything else. But it's the exact same business model. It's like when you walk into a Cava, it looks identical to a Chipotle. It's just when you get to the counter, instead of there being like a tortilla, it's like you have different types of food. Okay. It's Mediterranean instead of Mexican. That's really it. And it is just absolutely, I think it's delicious. Honestly, I do. I think it's delicious. My wife thinks it's delicious. Everyone that I've talked to about it, likes it. So I bought Cava in the long-term portfolio a while ago. I mean, we're up, pretty nicely on this position. But it's a long-term hold. It's something I plan on holding for many, many years. And I expect the stock to be really volatile. I expect it to have like really good periods and then really bad periods as they go through the growing pains of trying to do and complete a full national rollout, and eventually maybe a global brand. But that's going to take time. I have no problem holding this stock for the next 10 years. Okay. So that it is a name that I'm going to be, that I'm going to own for a while. Okay. But Chipotle, getting the crap kicked out of it on that miss on earnings. All right. I see a lot of you talking about QS. I see some people in chat are talking about QS. Yeah, it looks like you're getting an announcement from QS. Earnings per share come in at a loss of 20 cents. Analysts were expecting a loss of 22 cents. This is one of the stocks that recently gave you, one of these big short squeezes. And you're right into resistance. I mean, I don't know if QS is going to be able to get through this level, guys, but if you take a look at my chart right now, you'll see the support level that we had back here in 2022. Then you broke underneath that. And then ever since you broke underneath that, the stock has been unable to get back above it. And it's just resistance, right? Resistance. And then you ran up into this area here again. And then once again here, just resistance. So that's QS. I don't know if that's going to be, I don't know if QS has enough juice to break this resistance level. If it does, that's going to be a pretty powerful break. I am leaning towards it being more likely that it does not break that level and probably pulls back. Maybe you run up there and test it one more time and then reject again. And then maybe the flames kind of start to fizzle out. I am a little concerned. I'll just put this out there. I've seen over the last 2 weeks a lot of short squeezes, and I feel like you're starting to see, like the crap is short squeezing. And I feel like you're getting towards the tail end of shorts just kind of waving the white flag and deleveraging out those positions, because I just don't think these moves are really necessarily sustainable. When you take a look at the stocks that have had these like 2 week rallies, most of them are not good companies and they're not good stocks, and they don't deserve to have their stocks go up 50, 80, 100, 150% in a matter of 2 to 3 weeks. But a lot of these stocks have. And when I see stuff like that, kind of makes me feel like the markets are getting to a point where we're going to need to cool off now a little bit. That little bit of a short, you get that short squeeze, and the short squeeze has now filtered its way through multiple different areas of the market. And that's what happens when shorts get squeezed. They need to deleverage positions. They get squeezed on one name. You have potential margin calls. You've got to liquidate other positions. So you cover other short positions to bring that down, to bring that leverage down. And that's when you start, and then retail traders get wind of it. And then retail traders just go and they just start buying stuff that has high short positions. And that further puts pressure on short sellers to cover their position. You get these like multi-week rallies in some of the crappier parts of the market. And that's what we've seen in the last couple of weeks. And typically when you see stuff like that, it means the markets are getting to a point where maybe you're starting to get a little too top heavy. And it could be kind of a signal of a potential kind of, little final hurrah before eventually pulling back and consolidating in the markets and the rally cools off. I'm not talking about a sell-off or a crash. I'm just talking about a pullback, consolidation, and a cool off of the rally, which I think is needed, and which I think would actually be very, very helpful, as this has been a deleveraging rally ever since the May number. If you guys have been following my YouTube channel for a while, back in May, I did a whole kind of series of live streams here when I was explaining to everybody that the institutional community is not positioned for the markets to move higher. That the percentage of assets under management on the institutional level were very, 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 I shouldn't say very, were above your average hedge percentages, which means that there was a lot of short positions. There was a lot of hedges on from an institutional level. They needed to get unwound. And the piece of news that really did it, that was the nail in the coffin, was in May, if you remember, when it was announced that the United States and China had agreed to lower the tariff rate while they went through the negotiations. That caused a gap up above the massive resistance level that was put in place prior to the Liberation Day tariff announcement. And it also gapped you above the 200 and 100-day moving average. And that day occurred right here. Okay, that did it. That was it. That gap up right there, that piece of news. And what you've seen is a melt up. And I did a whole series of streams there in May talking about, I think the markets could experience a melt up as you go through an unwind of those hedges, an unwind of those short positions. And then you have hedge funds and the institutional community are not positioned long. So then they chase performance and you get this melt up. Now that's good in the near term because stocks go higher, the markets go higher. But when you get those type of melt ups usually end with markets being at a price that is not necessarily justifiable. And then all of a sudden when profit taking kicks in, you lose a large portion of that buying pressure. There's just not enough people. There's no more shorts left to cover and everybody's chased that performance. And as soon as profit taking kicks in, you get this like whoosh, whoosh type of move where you can wipe out 2 weeks of a melt up. You can wipe it out in like 3 days. And something like that, something would look something like this. Like let's say if you just continue this melt up for another day or two or whatever it is, and then you do something that looks like this, and then all of a sudden you get one day that looks like that, and then another day it looks like this, and then before you know it, you wiped out, a week or two of melt up with just like 3 red days. And I think that this is the price action that we're kind of gearing up for. The markets have been incredibly resilient. Every dip gets bought. But I just think we're getting to a point where the markets are getting a little overbought now. I think we're getting a little extended. And I think a pullback and a reset back against these previous all-time highs, I think is a beautiful, very healthy pullback that we can look for. Okay. I think it'll be very, very healthy for the markets to pull back in. The 50-day moving average is going to work its way up there. And you have these previous all-time highs. It's just the perfect spot to pull back in and reset. And then we can look for longs off of that level. Okay. So those are my thoughts here with regards to the overall markets. Let's do a quick check-in on Alphabet. It seems to have stabilized here a little bit. Do a quick check on Tesla. That premium burn is still well in effect. The stock is basically flat. Chipotle, no bounce, still down 9%. ServiceNow, holding its gains up 5.5%. And then IBM, still kind of sitting near at lows, but down 5.5%. So, yeah, this is a support level. You really want to see like 265-ish. You'd want to see that level hold on IBM. All right. Now, the other thing I want to point out to you, a stock that I just want you to keep an eye on. Okay. I just want to keep an eye on it because I think it has potential to squeeze. It's CYCC. I don't have a position in it. I am not long. I'm not telling you tomorrow morning to go get long. What I'm telling you is I believe you have a breakout point at $20 that if it gets above, it could trigger a short squeeze. Okay. You can see $20 was a support level that you broke underneath it, and then it became resistance. The other thing that you'll see is the 50-day moving average, this dark blue line, continues to act as an area of resistance as well. And as we take a closer look at this chart, what you start to see is a condensing of price action. Look at this. You have the 9 EMA, which is the light blue line. And then you have the 50-day moving average, which is the dark blue line. And these moving averages are about to collide. And you can see the 50-day moving average is holding this thing down as resistance. And the 9 EMA is holding this thing up as support. We are coming to an inflection point. Okay, we're coming to an inflection point where this price action needs to resolve itself in one way or the other. And with the short position that is on the stock, and with the way shorts have been squeezing lately, I want to watch this $20 level, because if the stock gets above the 50-day moving average, this dark blue line, and does something like this, then you have the potential to squeeze through $20. If this stock gets through $20 with heavy volume, I think it has room to 40. Why 40? I will show you. Draw a line across $40. See this purple line or pink line? That's the 100-day moving average. And then see this little previous pivot low? That's also $40. So $40 is a beautiful spot. If you're going to get squeezed through 20, let's squeeze it through 20 and see if that squeeze could take you to 40. I'm not telling you to go buy this thing now. I'm not telling you to buy this thing tomorrow. What I'm telling you is to keep it on your screen somewhere. It's a very low volume stock, but if it starts to get the type of volume that it had on July 15th, or the type of volume it had on July 18th, that would be an indication to me, or a sign that shorts are beginning to get squeezed out of the position. And then I'm going to pay attention to it. Okay. It's just something that's on my watch list. I don't have a position, but it's something that I'm going to be watching. And if it gets above 20 with heavy volume, just know you'll most likely will see me be long the name if that were to happen. So I just want you guys to keep that on watch as we kind of roll through the rest of the week. All right. But listen, this is a good, so far, this is a nice looking earnings. This is nice looking earnings because, you know, you're getting a boost from all of your AI related names. You know, the NASDAQ obviously now moving higher on the back of the announcement from Alphabet. It's not Alphabet stock that's moving the NASDAQ, or that's moving the overall markets. It is the fact that they are increasing their CapEx to spend more on AI. And that's got NVIDIA, Broadcom, that's got all those stocks moving to the upside. Okay. And that's how you know. That's how you know that's what the market cares about. That's what the market is focusing on when it comes to Alphabet's earnings, because all you got to do is take a look at NVIDIA or Broadcom after hours, and you guys will see the significance of the move that you're getting on those names. Okay. So there you guys have that. All right. Does anybody have any questions for me? Tesla will not be on my watch list for tomorrow. I don't really see there being a high probability setup for us there on Tesla. So Tesla's not on my watch list tomorrow. Alphabet is also not on my watch list tomorrow. ServiceNow, not on my watch list tomorrow. IBM, most likely not on my watch list. Man, you know what? I'll keep an eye on it. I'll keep an eye on IBM, but most likely I won't be trading that tomorrow. Most likely I also won't be trading. I won't be trading Chipotle either. So, you know, this is one of those rare occurrences that we get a slew of earnings reports, and I don't necessarily think that there are grade A or high probability trade setups for us the following day. A lot of the action that you're getting right now in the names that I would have traded Tesla, I would have traded Alphabet, but they just look like, you know, premium suck type of earnings reports, where I think there might be better things to trade tomorrow than these things, unless something changes during their conference call. If they say something during the conference call that gives start to give the stock direction, then maybe I'll feel differently about it, but not something that I will be focusing on too much there for tomorrow. Okay. Get it? Get it? Good. Any questions for me, guys? Would you look at adding Google for your long-term portfolio now, or wait a few days? You know, I got to be honest. I'm not really comfortable adding anything in my long-term portfolio right now. I think the markets are a little stretched. I bought a ton of stuff in April. I'm very, very, very happy with the stuff that I bought in April. A lot of those stocks are up over 100% already. But I think, from a bigger picture, from a macro view, I think we're going to get a pullback here in the next couple of months. That if you're looking to buy some stuff, I think that's the time to do it. From a macro view, I feel like, what we might see is I am in the camp that I do not believe that the tariffs are going to cause a reacceleration in inflation. Now, I do believe that the tariffs will cause an inflation scare where you might get one inflation report that is significantly higher than what was expected, and that scares everybody. And then the following month or month after is much more tame and much more cool. And then everybody kind of takes a breather and calms down. But I think that you're going to get, maybe it's the July number, maybe it's the August number, but I think you're going to get a number that at some point is going to start to scare people. Maybe it's the July CPI number that we're going to get in August. But I think at some point there's going to be a surprise. I think the markets have gotten really complacent with how inflation has really cooperated, and you really haven't seen this big surge like everybody was worried about with tariffs. I don't believe tariffs are going to reaccelerate inflation, but what just happened to Alphabet? Yeah, Alphabet just turning green. Alphabet actually just turned green. The way I look at the tariffs is inflation's a rate of change, tariffs are a price. So even if you get a 15% effective tariff rate on a particular good, so the price of that good is going to go up with the tariff, but then that's going to affect the rate of change from that month over month and then the year over year. But then when you look at the following month's number, that rate of change then plummets. So and also a higher price for a particular good is going to also lower the demand for that good on an already kind of tired consumer. And that also acts against the inflationary pressure as demand were to slow with the higher price. So I don't think it's going to be this, like we have this situation where the tariffs come on and all of a sudden inflation just goes up and up and up and up and up and up. I don't think that's going to happen. But that doesn't mean that you still might not get people that are going to get scared of it. Because what I think is happening right now, and I actually had 2 different conversations today with 2 different people asking me about what my thoughts are on the tariffs, and they're not really seeing the inflation yet. And I said, well, honestly, to me, it's probably a combination of 2 different things. One, you had a big, huge pull forward of inventory before the tariffs went into effect by companies trying to pull as much product in as they could. They've got to turn that inventory over, which I'd probably say you're getting pretty close to that, where that inventory, it's been enough time now. It's been a couple of months. I feel like that inventory is getting turned over. But really what I think is the case, and if you listen to a company like General Motors, you listen to a company like Home Depot, this is what is happening. And this is what I think is the real driving factor behind us not seeing the inflationary pressure yet. It's because if you're a CFO or you're a CEO, the way that I would look at this is I think companies are right now, for the time being, they're absorbing as much of those tariffs as they possibly could, which is compressing their margins because they don't yet know what their final tariff rate will be. And they don't want to prematurely raise prices and test the price elasticity that they have with their consumer. If you raise prices right now and your competitor does not, a tired consumer will trade out to your competitor and will switch brands for the cheaper product. What you don't want to do if you're a company is raise prices now because you have a 30% tariff, raise prices now, and a month from now, that 30% tariff becomes 12. And then you raised prices, you lost the consumer to another company. And then now that your tariff rate's lower, you can bring prices down, but you've already lost the consumer. And now you have to work 10 times harder and you have to spend that much more on marketing to bring that consumer back to your brand and get it away from your competitor's brand. I think that a lot of that is taking place right now. And I think these companies will do this for as long as they possibly could to wait and see what the final number is for their tariffs. Like you saw with Japan today. Japan today is going to be getting a 15% baseline tariff. But just the other week, it was announced that Japan was getting 25 or 30% tariffs. right? And now the final number based on the trade deal that was announced today is 15%. So I still think you can end up with a situation where the effective tariff rate, when all is said and done, when you average out all countries on all goods and all, dollar amounts and the weightings of how much money comes, how much of our trade is from which country, and when you weigh it all out, I think we're going to end up with an effective tariff rate somewhere between 10 and 15%. And if that is the case, I think that we can handle that. I think the economy can handle that. I don't think that's something that is going to it's going to hit the consumer very hard. But if you end up with an effective tariff rate that's more like 20, 25%, I think that's too high. And I think that is something that will affect the consumer. And that is something I think would end up potentially being a problem for the economy going forward. But I think that we're going to gear up I think we're going to get a pullback here at some point. Maybe it's, August into September. But I do think that a pullback is coming, not a crash, but I do think a pullback is coming. I personally am not adding anything to my long-term portfolio at these levels. I think you're going to get a better chance and better prices over the next 2 to 3 months. All right. If Powell cuts rates, will case market. If Powell cuts rates, will cause markets to rally irrespective of tariffs. So that's funny that you actually said that, right? That's a good question that you asked, because the conversation that I was having with somebody today is that the assumption, and I'm not saying that I disagree with this assumption, but the more that I hear other people say something, the more I try to think the other way. If you asked me a couple of months ago, I would have told you that, the Fed cutting rates there in September would be a positive catalyst for the markets. But if we roll through here and we go into August and you get a CPI number for July that's hotter than expected, or if the August number is hotter than expected in the month of September and the Fed cuts rates, just because the Fed cuts rates, everyone thinks the market's just going to rally. But if the market rallies now in anticipation of the rate cut, then it becomes a buy the rumor, sell the news type of event. And then if you get a higher than expected CPI report mixed in there, that's your catalyst for the pullback, and the market is caught off sides. In April, I was talking to everybody, and in May, we were talking about the melt up. And we were talking about the melt up because the market is not, a lot of institutions were not positioned for the long. So you get this melt up. That means people were not long enough going into this rally, and that's what's causing the melt up. But then if you then play it forward into the next month or two, you then run into a situation where everybody is now too long going into a potential rate cut. And then the positioning of markets go from too much of a hedge to not enough of a hedge to not enough long exposure to too much long exposure. And that actually turns into a situation where the Fed cuts rates and the markets actually go down. So I'm actually starting to think that you might see something like that take place. Either way, I'm trying to think forward through what the potential catalyst could be to actually trigger the pullback. I don't necessarily know exactly what that catalyst will be. Just what I do feel is that if you're looking for long-term portfolio adds, I just think over the next 2 months, I think you're going to get better prices to do that. All right. So those are my thoughts. Right. Anybody else have any questions there for me? Listen, guys, those of you that are not members of True Trading, if you guys have to just understand, these type of talks, this type of analysis, this type of commentary, this is what members of True Trading get day in, day out from myself and the 8 other professional moderators the other 8 other professional traders that are moderators inside of True Trading Group. We share our screens with them every day from morning to close. We talk on the mic. We send out our trade alerts live. We trade in front of you live. We answer questions. We give our analysis throughout the entire trading day. We're not gone after an hour and you're left to fend for yourself. Okay, this is part of the reason why members of TTG are able to be successful. They're able to make money. That, and along with all the tools and resources that we have, thanks to our partnerships with the NASDAQ, Benzinga, OpenAI, Unusual Whales, TradingView. We have partnerships with all these companies that helps make our AI platform. It helps make our fintech platform, that is True Trading Group, the equivalent to a Bloomberg terminal for the retail trader with the access that you guys have to the tools, resources, data feeds, etc. Okay, and that is the reason why so many members in TTG are having success, because it is allowing them the technology and the resources and tools that we have is simplifying their trading process. They're learning faster. It's allowing them to trade much smarter, and it's allowing them to profit much sooner. Okay, by having access to these tools and resources. And don't just believe me because I'm saying it. Believe members because they say it. Members of True Trading Group, do me a favor, type the number 1 in chat right now. If you guys are making money, if you're becoming better traders because of TTG and because of Mari and our AI and all the tools and resources we have available, if you guys are making money because of all this stuff, go ahead and type the number 1 in chat right now. Anyone that's on this live stream that is not a member of TTG, that has not had access to this platform, that has not used these tools, these resources, pay attention to all the people that you're about to see type the number 1, because these are your friends, your family members, your coworkers. If they can do this, then so can you. There is absolutely no reason. Elite Party DJ says, I am up over $100,000 in the last 5 years. That's incredible. Congratulations, man. That's absolutely incredible. There's my man Wizard. What's up, brother? He goes, you know who I am. I sure do. I sure do. What's up? What's up? Arizona. Anyone that needs an HVAC service in the Arizona area, hit up Arizona LLC. I always feel like I have to give the shout out every time I see you on the live stream, man. Every time. All right. But you guys can see all these members are typing number 1. They're sitting here telling you, hey, I once was a viewer on this YouTube stream and I became a member of True Trading Group. I have access to these tools, to these resources. I get the guidance from the moderators. I'm part of a community of over 10,000 traders from all over the world that genuinely give a damn whether or not you succeed or fail. It truly is a family here, guys, inside of True Trading Group. And yes, the moderators are amazing, right? Myself and the other moderators are incredible traders. We also have phenomenal traders that are members of TTG as well. We all feed off each other. We all, lean on each other, pick us up when we're down, celebrate the wins and the victories when we're up, and just to keep us moving and be our eyes and be our ears and rely on Mari and our award-winning AI platform to help them do that. If you guys are not members of True Trading Group, I'm telling you now, you guys are actually in luck, because Adam, who's my business partner and co-founder of True Trading Group, is just completely MIA this entire week. He actually had to, flew, I won't say where, but he had to fly somewhere to take his daughter to sleepaway camp, and went on a little family trip. So he's been out. So he actually did not change the annual membership price. I offered people a couple of days ago, I offered about 20 people that joined True Trading Group. I offered them an annual membership for just $599, and I gave them a double their money back guarantee, which meant if you can't make the $599 back, okay, at least once during your membership, then I would be giving you $1,198 in return. That $599 price was supposed to be changed to $899 a few days ago. Adam has been on his trip with his family. He has not changed it. So if anyone here that is not a member, but he's on a plane right now, full disclosure, Adam is on a plane right now. So as of tomorrow, that price will be changed. Anyone that wants to join True Trading Group, you can do it right now by going to ttgoffer.com. You can join the entire annual core membership for just $599. If you cannot make the $599 back at least once during your membership, I will give you back $1,198. That is our double your money back guarantee. It is in black and white on the checkout page in big, beautiful print. Okay, go read it. All right, yes, it is real. Do I think you need it? No, considering our refund rate is less than 2.5%. But you get access to everything for $599 for the year. All I ask is you go through our courses, pass our quizzes, attend one study group, and if you still cannot make back the $599 at least once, we'll give you back $1,198. All right? Starting tomorrow, the price will be $899. You can get it now for $599. Just go to ttgoffer.com. Again, that is ttgoffer.com. You're going to get Mari, our AI trading co-pilot. That's the award-winning platform from Benzinga's FinTech Awards. You're going to get our 22-course curriculum, which is a simplified and expanded upon version of the training that I received working at the fund in New York. Of course, all of our watch list, the chat room, all the trade alerts, the mobile app to follow along if you're not in front of your computer. You got Benzinga Pro's newsfeed, TradingView's premium charting software, 1,000 hours inside of our video library covering different topics, unusual options activity, options flow, dark pool data, All of this stuff is included for $5.99 for the year. You might pay for some of this stuff. You might pay for dark pool data or for TradingView Premium or for the Benzinga Pro News. You might pay for that stuff already. When you join TTG for $5.99, you get all of it included with your membership. Go to ttgoffer.com. Everything you see on that page is included. No additional costs, no upsell for anything you see on that page. Now, we do have other things you can pay for. We do have 9-week accelerators and 6-month mentor programs. We have in-person meetups. We have our AI Pro, which is our highest model of our AI with unlimited prompts. That stuff does cost a little bit more, but when you join TTG's annual membership, you get access to all of this. It is a wonderful way for you guys to join the platform, feel it out, experience what it's like to be part of the community, use the tools, use the resources, trade with us, get familiar with the mods, make some damn money together, and then decide if you want to purchase some of the other stuff. $5.99 for the whole year, ttgoffer.com. If you can't make the $5.99 back at least once, we'll give you back $1,198. You just have to go through the courses, pass our quizzes, attend the study group, and if you still can't do that, then we'll give you that double your money back guarantee. I don't think you need it, considering our refund rate is less than 2.5%, and our retention rate amongst our members is well into the 70s. Okay, it's well into the 70s. And the reason for that, again, guys, is very simple. Our members are making money. In case you missed it before, I'll prove it again one more time. Members, type the number 1 if you guys are making money, if you're becoming better traders. If our AI has simplified your life, has simplified your trading, and is allowing you to now make money with ease compared to what you were doing for the last several years, sound it off. Type the number 1 in chat. I want to know, are you becoming better traders and making money with TTG? If the answer is yes, type the number 1. Again, guys, anyone that's not a member, if you're still on the fence, if you're thinking about it, pay attention to how many people you're about to see type number 1, folks. If they can do it, so can you. They are not luckier than you. They do not have more time than you. These people, 82% of our members have a full-time job. If they can do this, and so can you. Mari, our AI, makes it all possible. She'll build the trading plan for you. She'll identify your stop loss, your take profits. She'll figure out your position size based on your risk. Come check it out. I said 1, damn it. Yes. My man, the Fade Doctor. What's up, bro? Kathleen, how are you? Dale, Helen, Susie, Kaivo, Pamela. What's up? I love to see it. Guys, listen, if you have any questions at all, if you are not a member and you guys have any questions, you need clarity on something, you have questions, you need help signing up for whatever the reason, send a text message right now to 1-888-621-2127. Again, that is 1-888-621-2127. Text that number if you need help, you have any questions, anything you want to know. We are fully transparent. We are an open book. Just ask. That is a text message only phone number. Don't call it. It is a text only number. So just text 1-888-621-2127. We'll be happy to answer any one of your questions. Mandy says, literally, if I can do this, anyone can do this. Mandy, don't be so hard on yourself. Don't sell yourself short like that, Mandy. You're doing fantastic. My boy Nav says, join. Best decision you will ever make. The Fade Doctor says, Mari takes care of me while I'm cutting hair on my day job. I need a cut, Fade Doctor. Maybe I'll fly to Dallas. I need a cut. I actually have a haircut tomorrow. I'm getting a haircut tomorrow, but I can use a cut, man. I can use a cut. Woo! Armando says, I am up 45%. I recouped $9,000 in approximately 5 weeks after using Mari. I love to see it. That's incredible. Just patience, Kay says, invest in yourself. That is the best advice that you could ever give somebody, is invest in yourself, guys. You are the best investment that you will ever make. It is the investment is the one you make in yourself. So again, folks, ttgoffer.com. Tonight's the last night for $5.99. Once Adam lands, which should be in about, he actually should land in about 5 or 10 minutes. But by the time he gets out of the airport, by the time he gets home, gets to his computer, he'll change the price. So how do you know you're going to get the $5.99 price when you go to ttgoffer.com? Does it still say $5.99? If so, check out. You're going to pay $5.99. If it does not, if it says $8.99, then that means Adam's already changed it. $8.99 is still a fantastic deal, and I'll still offer you the double your money back guarantee at $8.99 as well. That's how confident we are in the platform that we have created. That's how confident we are in the success that our members experience, that we feel that you can do it too. ttgoffer.com. Text us with questions, 1-888-621-2127. That does it for us tonight, guys, on the live. Hope you guys enjoyed. We covered Alphabet, we covered Tesla, we covered IBM, ServiceNow, Chipotle, all your top earnings, markets, new all-time highs today. We've got some stocks on watch for short squeezes tomorrow, and it's been a short squeeze type of market these last 2 weeks. Let's see if we can keep that going. You guys know the ticker symbols. I'll be watching there for tomorrow. If you guys want to trade with me live, you've got to be a member. We don't do it here on the YouTube channel. We do it on the TTG platform. So log yourselves in. Let's get ready to kick some ass tomorrow. All right, ttgoffer.com. Text us with our questions. If you haven't done so already, smash that like button, show some love, subscribe to the channel, turn on your notifications. Make sure you never miss out on any of these lives. I'll see you guys all later. Have a wonderful rest of your night. Take care, folks. See you all tomorrow.